Ever wonder if hiring a financial advisor is worth it as a real estate investor? Maybe you've been managing everything yourself just fine, or maybe your advisor doesn't quite get real estate, and you're starting to wonder if you're leaving money on the table. Either way, you're not alone, and in this video, we're going to dive deep into the question, should real estate investors hire a financial planner? We're breaking this down into 3 parts. First, the type of investors who probably don't need one. Then the scenarios where having a planner on your team isn't just helpful, it can actually save you serious money. And finally, what to look for in a planner if you decide to bring someone in. Before we dive in, I want to be fully transparent. I'm a financial planner who focuses specifically on working with real estate investors. So yes, I do have a dog in this fight, but this isn't a pitch. My goal here is to be as unbiased and objective as possible. Whether or not you end up working with someone like me, I want you to walk away from this video with real clarity on whether hiring a planner actually makes sense for you. Alright, let's start with who doesn't need a financial planner. If you're the kind of investor who lives for spreadsheets and you genuinely enjoy diving into tax law and you feel completely at ease and have the time for coordinating, strategizing, and implementing your plan with your financial team, then you might be totally fine on your own. Some people like mowing their own lawn, others like optimizing their cash on cash and structuring and implementing their estate investment and tax plan. If that's you, more power to you. Now, it's not just about knowledge, it's also about willingness and bandwidth. If you're organized, proactive, and have the time and energy to stay on top of all the moving pieces, then a financial planner might not add much value since you love learning and doing this stuff anyway. Then there's the cost. Hiring a planner isn't free, and if you're super cost sensitive, that might be reason enough not to use one, especially if you want to be doing all the work a financial planner would be doing for you. Although the financial planner should more than pay for themselves through saving you on accountant and attorney fees, as well as preventing you from making costly mistakes. Even if you don't want to DIY your financial life, you might want to hold off on using an advisor if you're in a phase in life where you're not ready to act on a long-term plan. I see people say that they want a plan but not actually end up doing anything with it, even when the advisor is running the show and working with your estate attorney to draft that trust you keep pushing off. Now let's talk about the people who should seriously consider hiring a planner. Let's say you've got a few rentals, maybe you're flipping houses or doing short-term rentals. You're earning real money now, but here's the thing, the IRS is probably your biggest business partner, and they don't exactly work for free. That's where a financial planner, especially one who understands real estate, can really save you some money. A real estate-focused financial planner understands how to structure your entities, your depreciation, the pros and cons of using a cost seg study on each property, and really everything in a way that maximizes legal tax savings. Because it's not about loopholes or shady tactics, it's about knowing how to stack bonus depreciation with real estate professional status, or how to structure your AB trust. If you just nodded your head because you know what I'm talking about, awesome. If you didn't, then that's where an advisor can come in. If you're already working with an advisor and you've had to explain how a 1031 exchange works, or if you've been pitched mutual funds and non-self-directed IRAs when you've said multiple times, I don't want to invest in the stock market, then that's another sign that working with an advisor who understands real estate is needed. Working with a generalist advisor is like asking your primary care physician to perform brain surgery. It's probably not the best idea. And then there's the coordination. Most real estate investors, especially once they start scaling, have a lot of moving parts. You've got LLCs, maybe a holding company, insurance policies, estate plans that were drafted 2 kids and 2 properties ago, and all of this is competing for your attention. A financial planner, again, one who understands real estate, acts like a quarterback, making sure that all the players on the financial team are running the same plays and aren't tripping over each other. Because I can't tell you how many times I've sat in on meetings between my clients and their accountants where the accountant asks a question and the client answers incorrectly. But because I understand the client's full financial picture, I'm able to further clarify their response. Things like this sound small, but can end up costing someone a lot in the long run. And that's how assets end up in probate, tax bills balloon, and your portfolio turns into a headache for your kids instead of a gift. So let's say you're thinking, all right, maybe I do need someone. How do I find the right one. First thing, look for a registered investment advisory firm, or RIA for short. Advisors at RIAs are fiduciaries, which means they're legally required to act in your best interest. That's not just marketing fluff, it matters. They're not pushing mutual funds for a commission, their only job is to help you succeed. Now, most RIAs charge AUM fees. If you only invest in real estate or most of your net worth is not in a retirement account, then the advisors at these firms will most likely self-select out, since there's no way for them to charge you, since directly held real estate isn't AUM. Second, know your style. If you're more of a do-it-with-me type, someone who wants control but appreciates guidance, then find a planner who does one-off projects or annual reviews. They'll help you build a plan and then you can run with it. And if you're more of a do-it-for-me person where you want someone to handle the financial stuff while you focus on the business, then a subscription-based advisor might be a better fit. These planners work like ongoing consultants. They're not incentivized by assets under management, which is important because the last thing you want is someone nudging you to sell your properties so they can manage the money. And finally, quiz any prospective advisor on real estate. If they look at you like a deer in the headlights when you ask about things like real estate professional status or the drawbacks of using accelerated depreciation, then they won't be able to properly advise you on your rentals. In fact, they should be bringing up topics like these during your consultation meeting. So to sum it all up, if you're a financial DIYer and you enjoy it, you might not need a planner. On the other hand, if your finances are growing, your time is limited, or your advisor doesn't speak real estate, it might be time to bring in a pro. A good financial planner will help you keep more of what you make, simplify your decision making so you're not having to decide between the infinite amount of strategies out there, and make sure your investments are actually serving the life you want to build. Not just this year, but decades down the line. All right, thanks for watching. If you got value from this video, hit that subscribe button for more real estate financial planning content, and I'll see you next time.